The Federal Reserve has cut rates 50 basis points, the most aggressive rate cut since 2020, since the pandemic. What does this mean to our money that we spend and the prices that we tolerate? Welcome to FreedEm Culture. Here on the FreedEm Culture, I discuss current events in the financial sector, this new digital economy, and also breaking down blockchain technology in the most understandable terms possible. And today I'm going to break down what does this mean, this recent decision made by Jerome Powell of the Federal Reserve, chairman of the Fed. What does this mean for our money? What does this mean for our economy? So it's going to be a really quick video. This is my segment on my channel called Critical Take. And here I like to capture the moment, capture the very important moments that will have an impact on our lives. So I'm going to share my screen and we're going to watch a quick clip of yesterday's meeting with Jerome Powell. Just give me one quick moment. I'm going to go ahead and share and play the clip.
What message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
All right, so he's saying that he's dropping the rates because of the inflation target is closer to 2%. So I don't know about y'all, but I don't really feel inflation being any lower. It feels like these prices are still up there. When I go to the grocery store, I'm still spending a lot of money just for a few things, But he's saying that they're dropping rates because inflation is low. And typically what happens here is the dollar will get weaker. So the currency will be weaker, but the markets will do great. The Fed slashes interest rates by half a point, an aggressive start to its first easing campaign in 4 years. Since the COVID pandemic, there has been a lot of money that flooded the system. We've been given stimulus checks and a lot of money in the system. And, we've paid for it ever since that happened, ever since the pandemic. So what goes up must come down. And right now, I really don't have much to say on the movements of what's going on with the Federal Reserve because it's so much trickery, in my personal opinion, to follow. All I do is stick with sound assets. I like to stick to what counts, precious metals, tangible assets, and cryptocurrency stored on a hardware wallet. One thing that we must consider here is in 2001, the Fed lowered rates before the dot-com bubble burst. In 2008, the Fed lowered rates before the housing market crash. In 2020, the Fed lowered rates before the pandemic lockdowns. And in 2024, the Fed is lowering rates again before he's assuming World War III. Now, I hope things don't get to that level. I'm hoping things just stay cool. I like peace. Here on this channel, I'm a advocate of peace. I'm a longevity advocate. I want everybody to enjoy themselves for a long time. However, we really got to consider what's going on here with this market. One thing with this presidential election and stuff like that, nothing really, they're all agreeing to rate cuts. You got the left and you got the right, but one common denominator in the middle is the Federal Reserve and what we got to deal with in the money. So that's why I like to cover that. I like to cover what's really important, what we spending with. You feel me? So yeah, how I take this, I'm just giving the information, and how I'm responding to this is doing what I've been doing, which is stacking up on cryptocurrencies, stacking up on tangible assets. I've been stacked up on tangible assets, and now I'm just setting my exit strategies, because there will be a bull run and it will be time to take profits. I'm not going to sit back and go for the ride like what happened in 2021, you know? So there will be a time to take profits. I'm going to say this again. There will be a bull run. Interest rates has dropped, you know? The market will do well. Weaker dollar, stronger market. And we still got the Stop Congressional Trading Act bill, which I believe they will pass at the top, and then a whole bunch of Congress will divest, like I explained in my video below. Please check it out. I'm gonna do I'm gonna go and expound on that more in depth. But yeah, I'll be careful with the banks right now. I'll be careful with cash. You know, as Crypto Shark, shout out to Crypto Shark, as he mentioned, possibly World War III. These are all things that we have to consider. And typically during war, banks aren't safe, you know, cyber attacks, all of this stuff. That's a lot of things we gotta be mindful about. So great time if you're an investor, not so great if you're a consumer. That's all I'm gonna say right now. Peace, love, and respect. Take care of yourself. Watch out for my next video. I just wanted to rush this one out real quick to keep you updated on what's going on. All right? Peace, love, and respect. Make sure you check out my links below. Catch you on the next one.